Hi traders, and welcome to the daily recap show for yesterday's US session, which was Tuesday the 5th of July, which was a day after Independence Day, which we said can often lead to choppy open as order flow settles down. We said that acceptance below 37.76 to 37.84 could see moves initially to 37.52 to 37.60 and then support at 37.35 to 37.43. So let's go and have a look at the S&P from yesterday. Okay, so as you can see, we've got this strong impulsive push down on the open. Then it just meandered down into this support zone at 37.35 to 43, and that held for the day. So that zone worked really, really nicely. We initially held we got the acceptance in the pre-market session, and then we held that on the retest initially. There was quite a nice reversal pattern there. That was a potential trade as well. You could have looked to run it down. The overall sentiment in the market is bearish at the moment, so you could have looked to run that down here. You would still want to risk manage this trade, so plenty of opportunity to risk manage this trade, not take a loss. But if you've gone for further targets, I think it was a legitimate option to try and retarget this zone. If you'd done that, this probably would have ended up being a break-even trade. However, we then did get another opportunity when we broke through and we retested this zone. So we got a breakthrough here. We did get a continuation pattern, but we haven't really had the acceptance above. We then got the acceptance above, and then we got a really nice continuation pattern here. So this second signal was the better signal. This one here is a little bit aggressive. It is valid, but as I say, it's very aggressive. This one here, you've got the confirmation, the acceptance back above the zone, and then the continuation. And that then took us up into the 38.17 to 38.25 zone, which we noted in the report as resistance as well. So a few opportunities there on the S&P. The best signal probably from that initial push down was on the 15-minute chart. We got that tagged the bottom there, and then got the really strong impulsive push up. So that was probably the best pattern, certainly as per my plan, that would have set up. Nothing really on the lower time frames to get in. However, from a price action point of view, that did look really nice. And then, as I say, we had another couple of opportunities later on in the session for this. This one, as I say, I probably would have been targeting back below here, so this probably would have been a break-even trade for me. But if you'd just gone for like a quick one-to-one target, that would have been a nice winning trade. So that's the S&P. Let's go and have a look at the Dow. So we spoke about the US public holiday on Monday as well in this one, and we said our initial resistance was at 309.60 to 31010. We said we had some support at 304.35 to 304.85, and then we spoke about the sustained breaks below there. We said if we saw an inventory correction back to 31.100 to 31.150, we had resistance there, with main resistance at 31.325 to 31.375. So let's go and have a look at the Dow yesterday. Okay, so we came down into this initial 304.35 to 304.85 support zone. We initially held it as support. Again, a bit like the S&P, when we come down and there was no real clear pattern on the lower time frames for me to get long. We then saw this impulsive push down here, and we got a bit of choppy action just below the zone. We got a push up. We did get a continuation pattern here, but it didn't trigger. It didn't break down, so therefore we didn't actually have a signal there. We had the signal, but we didn't actually get the trigger. And then we got the push back up above the zone, and we held above it. So if you had got short in this area here, then that would have been a losing trade. There was nothing there for me to actually get short on, but if you had got short there, that would have been a losing trade. Having had the impulsive push through and balancing below that zone, I think it's legitimate to look for shorts in that area. But then we got the move back above, and then we held it sort of in these areas here on retests. So that was to suggest that this was a false break. You obviously then at that point had the reversal on the S&P as well to sync up with the markets, and then we pushed higher. I mean, there are some continuation patterns sort of here and arguably sort of here as well, but nothing of high probability, certainly because it is counter trend at the moment as well. So the clearest opportunities for sure today were on the for yesterday, were on the S&P. So hope you found these reports useful. Please let me know what you think. Please comment on the box in the YouTube box below and let me know what you think of these reports. Please subscribe to our YouTube channel. Sign up to the Keyzone the US Keyzone service. The link is in the box below as well, and come and join the Keyzone Traders community. Hope you're having a great week, and I'll speak to you again soon. Cheers.